break it down so y'all can understand the do's and don'ts when it comes to credit. And let me explain. If you pay your credit card payment twice a month, it's going to really help boost your score. That is false. That is furthest from the truth. We're like, oh my gosh, go ahead. Like, this is a trick. This is a hack. That is false. Co-signing for a loan removes your debt obligation. No. And this is why I always say never co-sign for anybody. Baby, I don't care how much you in love. I don't care how much they put it down. Everything ain't free. Basically, if you don't understand your relationship with money, you're going to find yourself in that same situation again. It's that credit cards is bad. No, the only person that's bad is you. Welcome to the 700 Club. I'm gonna need you to leave that 4, that 5, and that 600 credit score at the door. I'm your girl, Nika Johnson, and I help people take control of their money. And today we will be talking about myths about credit. That's right. I'm gonna break it down so y'all can understand the do's and don'ts when it comes to credit. So take out your pen and your pad because class is now in session. So when it comes to credit myths, there is so much misinformation that's out there. Sometimes it's clickbait as a marketing scheme. Sometimes it's to get people to sign up for whatever programs or services that they have to offer. I am just going to provide some information for you to just do your due diligence ultimately. And I just really want to educate you and empower you when it comes to credit. One of the biggest myths, paying your credit card twice a month will help boost your score. Just let me know in the description, a show of hands, how many people actually heard that. Basically is if you pay your credit card payment twice a month, it's going to really help boost your score. That is false. That is furthest from the truth. And let me explain. If you made one payment of $100, the total amount is going to be calculated for that statement cycle. Or if you made 2 payments of $50, that total amount is $100. College behind it, people think that it's a trick or it's a hack, and it's not. All you're doing is paying more towards your balance. That's right before the statement cycle closes. So what does that do is you're paying more money, which reduces your utilization. That's what caused your credit score to increase. But if you make biweekly payments of $25, if you're making a lump sum payment that totals at biweekly payment amounts, it's still going to be calculated the total amount. So this is one thing that I noticed in a lot of Facebook groups. We're like, oh my gosh, go ahead. Like, this is a trick. This is a hack. Go ahead and pay your credit card statement twice in a month and it's going to boost your score. No, just pay down your credit card debt. That's what's going to help boost your score, by paying down the debt ultimately. Question: does paying off your collections accounts boost your credit score? Yes or no? The answer is no. Paying off collections accounts is not going to help increase your credit score. And let me explain the reason why behind that. Is that the damage is already done. So when you're paying off a collections accounts, the benefits and how it does help you is because it's going to reduce your DTI, which is your debt to income ratio. It's reducing the amount of debt that you have. So sometimes you may need to pay off a collections accounts to be able to get approved for some type of loan, such as, let's say, for a mortgage or an auto loan. You're going to see it really common when it comes to purchasing a home. And your lender, that mortgage lender, should be able to walk you through that process and give you some guidance on which accounts that you should pay off and which accounts that you shouldn't. Oftentimes I see people say, I paid everything off my credit report that was in collections and it did nothing to my score. You're correct, because the damage is already done. So when we're talking about building that credit score, you need to offset it with that negative by rebuilding a positive payment history. So you need to offset the negative and build the positive. Now, before, if you ever decide to pay off a collections account, I always recommend asking for a debt validation, to ask them to validate the debt is yours. And if so, you can look into doing a pay per delete or some type of settlement option. But paying in collections accounts does not boost your credit score. You will want to, is because from an underwriting standpoint, it does help to get approved for other type of loan products, credit cards, auto loan, personal loans, because from an underwriting standpoint, they'll say, hey, this person made a mistake, but they made good on that. So there was a loan that defaulted, but then they did pay it. So there's pros and cons of why or why not. So it's not a one size fit all. It's what is your current financial situation? Are you in a time sensitive period to where you're trying to close on a mortgage and you need to be able to pay off that debt? Okay, by means, go ahead and pay it off. Or if you have a little bit more time and you're just trying to build your credit, okay, then look at some other alternative options as well. Another myth is you should not worry about any collections accounts on your credit report for what is it they say for 2 years. Like after 2 years you shouldn't worry about it. I don't know where that came from, but this is what I'm gonna tell y'all. Folks, like everything ain't free. You can't Google and YouTube your way to success. You can't Google and YouTube your answer to everything. Is there a lot of free information and resources out there? Yes, but some of that information is not credible, and this is why I always make the statement that it pays to play. Like, pay for people knowledge, pay for people expertise, because you're gonna pay in two different type of aspects. This is you're gonna pay from time, or for example, it may take you longer time to fix your credit instead of hiring an expert, right? Such as Budget Success, hiring my company to fix your credit. Some people are like, hey, no, I want to learn how to do it myself. I want to study the laws. I'm going to sound the dispute letters. I'm going to figure this out. So it's going to be more time, or it's going to be money in a sense of, okay, you're going to pay someone. But one thing I kind of want to point out is that a lot of people feel like after 2 years, you should never worry about a collections account. And that's the furthest from the truth. You need to know what is your state statute limitation. So you can go to this website right here and you want to do your due diligence to know what is statute limitation in regards to that aspect. It's because some debt collectors continue to want to come after you for a debt. But if it's outside that state statute limitation, that means it's not going to uphold in the court of law. So they could attempt and they could send you all type of letters. They could do all type of scare tactic. But if it's outside of that, then there's nothing they can do. And here is proof of a debt that something that I disputed for one of my clients. It was outside the state statute limitation. So again, make for sure you take a deep breath and make for sure you read. I am not being funny. Read. Read the letters, read the fine print, because sometimes it is advertisement and such as. Following up, something similar to that is that accounts just fall off within 7 years. False. All right, and now another one is bankruptcy is a second chance. That is false. Now, can it be? Absolutely. But the issue is if you don't understand your relationship with money and you don't understand what you did to get yourself into bankruptcy, you're going to find yourself filing another type of bankruptcy. So can bankruptcy be used as a second chance? Absolutely. But you need to understand financial literacy, money management, how to budget, how to save, pay your bills on time. Some people will be filing bankruptcy for $11,000 of debt. And I just kind of disagree with that. Now, if exceptional large amount of debt, then use it as a second chance, but understand how you got yourself out of there to keep yourself out of that predicament going forward. Basically, if you don't understand your relationship with money, you're gonna find yourself in that same situation again. How many times have y'all went to go purchase a vehicle, to the dealership, and then they ran your credit multiple times and numerous hard inquiries? That's right. I'm here to tell you that some people say that you cannot remove hard inquiries off your credit report. You have to allow 2 years, which is 24 months for it to remove off. And that is false. You can actually dispute any hard inquiries on your credit report as long as it's not attached to an open account is what I will recommend. You do not want to dispute any hard inquiries that's attached to an open account. How can you remove some hard inquiries off your credit report? By calling the credit bureaus directly. You could be able to send them a letter. You could be able to dispute hard inquiries as little as within 24 to 48 months. And be sure to check out our 24-hour inquiry removal ebook for more help in regards to that. Here's an example of how I was able to remove a couple hard inquiries off my credit report, and then within 24 to 48 hours, you see how my score increased. Another credit myth is that you're going to a dealership is that they tell you that, hey, if you go to this financial institution, I can get you a lower interest rate, or it may be if you go through this financial institution with us that you'll get some type of kickback. You're going to get some type of incentive. Well, ultimately, they have a partnership with them. And so the dealership is going to kick back based off of how many referrals that they're sending to this particular financial institution, for example. And so they'll say, hey, you have to wait a year before you can refinance. That is completely false. You can refinance at any time. There is no penalty to refinance your loan. Now, there may be special loans because they gave you a second chance, and more than likely you was on the borderline of not being approved. So it was a special rate on how they built it. And so you may not be able to refinance with that particular financial institution, but you can take that loan to someone else, to a different financial institution, a bank, a credit union, All you got to do is look up or contact certain banks and say, hey, ask them to do preliminary information by what is the miles, what's the make model of the vehicle, what is your estimate approximately credit score, and they can give you an estimate as far as what the interest rate will be. But you can refinance the loan at any time. The benefits of refinancing a loan is because if your credit score has improved from when you first took out that loan, is that you can have a lower interest rate, a lower monthly payment amount, or sometimes both. Let's say that you're in a financial bind and you may need to lower your monthly payment amounts, then you can be able to refinance that auto loan and extend that term out. So what I mean by that, let's say that you only had 24 months on that loan, you could refinance that and extend it out to 36 months if you want it. However, be cautious, because refinancing, it can cause you to have negative equity in that vehicle to where you could be upside down. So there's pros and cons. I just want to lay the information out on the table. You do what you want, but I just want to educate you on the choices that you do have. And another credit myth is monitoring your credit is hurting your score. That is inaccurate. So I highly recommend everybody to monitor their credit. You want to be proactive and not reactive. You don't want to go apply for a loan and then something's on there that you're unaware of. So monitoring your credit is like credit monitoring. But however, applying for credit, such as a loan, a credit card, a limited increase, now that is going to be a hard anchor on your credit report, but monitor your credit does not hurt your credit score. You're able to monitor it. And I would recommend to monitor your score through Experian.com. Be sure to make for sure that you subscribe to my channel, Budget to Success, for more quality information and resources and tips delivered straight to you. Another credit myth is that credit cards is bad. No, the only person that's bad is you. I don't know. I just don't understand how people be like, credit cards is bad. Credit cards is good. Just like money, it's a tool. Credit cards is a tool to be able to bridge the economic gap, to be able to build wealth, to be able to have financial stability. So when people say credit cards is bad, no, I say go look yourself in the mirror. Is because you lack self-discipline, and that's the real issue, and that's the thing that we need to be able to address. So you want to make for sure that you have 2 credit cards at minimum, because again, the biggest component that makes up that credit score, aka that adult GPA, is your payment history. 35% of your credit score makes up that. The next component is your utilization. So just those 2 components makes up 65% of your credit score. 35% is payment history, 30% is your utilization. So you're missing your data points of that credit score ultimately if you do not have any credit cards. So what I will recommend is that if you have less than desirable credit, you can get a secure credit card. I also post a link of a credit builder card that my company is partnered with that you could be able to get approved for, where you're going to upfront the money and then they're going to lock that in to where they're going to give you a credit limit of that. So credit builder cards is basically reducing that risk to why you have to upfront that money. But you want to make for sure that you have some cards. Now let's say that you have average credit of 640 and above. If you're in the high 700s, find credit cards that's going to give you more bang for your buck. I really recommend staying away from those retail cards, those store cards. What I mean by that is because you want to be able to have a credit card that's universal, that you could use everywhere, not just a Victoria's Secret card that's only at Victoria's Secret, or one at JCPenney that's only at JCPenney. You be thinking you're getting a deal at checkout and be like, sign up now for 10% off. No, because what that does is now you have this credit card and you want to go cha-ching, 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 and just shop, but that's not in the budget. So credit cards are not bad. It's the discipline that as an individual will lack ultimately. You want to make for sure you have the discipline ultimately. Co-signing for a loan removes your debt obligation. No. And this is why I always say never co-sign for anybody. Baby, I don't care how much you in love. I don't care how much they put it down. Never co-sign for anybody. It's because if they don't care about their credit, why would they care about yours? So let's say that you co-sign on an auto loan for your best friend and your best friend agreed to pay. Hey, bestie, I love you. I'm gonna pay this I'm gonna pay this bill every month. You the godmommy of their kids. Okay. And what happens when they default? You don't know because you're expecting them to pay. You don't find out until something bad happens, and then it's the late payment already that's on your credit report. Can you imagine paying your card note and somebody else's? So my advice to you is that never co-sign for anybody, is because it never removes your debt obligation. It doesn't matter if you're first or second on the loan, primary or secondary, you are still responsible if you're on that loan. Another one is credit repair is bad. Now, I know during pandemic, there was an increase of a flex of companies of doing credit repair, but credit repair is not bad. It's the opportunity to be able to help support you on that journey of financial freedom, of that repair journey. So just imagine that when you need your car fixed, and let's say you need a new engine or you need your brakes done, are you going to do it yourself or are you going to go to an expert? Imagine when you're going to go get your hair done. Are you going to an expert? Imagine, whatever it is, there's experts in that industry. And so credit repair is not bad. Make for sure that you are following a company or working with a company that is legally, that's ethical, and that's not promise you any type of results, but it does help speed up that process by going through a company that specializes in that versus you're trying to do it on your own. But if you do need help when it comes to credit repair, go to www.budgettosuccess.net and my company will love to support you. And make for sure you use the code down below for a discount. The importance of education is key so you can know what and what not to do. Just because something worked for someone else doesn't mean that it's always going to work for you. So just know, empower yourself so you can understand the importance of financial literacy. So here are some credit myths. I hope you guys enjoyed. Comment below and let me know, did any of these myths help you out? Again, I'm your girl, Nika Johnson. I just got one question for you. Is that in your budget?